Hey guys, this is Julie. I'm going to talk to you a little bit about theory and show you a new workspace that I've got for you. I'll put this in the training room so that you can access it, download it, and start using it. So the theory behind the JATS PT ranges is if you knew ahead of time what the range might be, the average range might be, would that help you make decisions on whatever time frame that you were thinking about using. So this is timed based analysis. So you can do this on a daily range. So the daily range on Friday was about 97.50, going from the high tech to the low tech. And so if you knew that the range was going to be that distance, you could plan accordingly by either trading to the target for a full range expansion, or you could, depending upon what time price reach that range, maybe expect more, or a reverse to the mean, overbought, oversold condition. Um, or you could just take your money off the table and say target reached. People also sell spreads, so you could park your risk just a little bit outside that range, um, and sell the premium, sell a put, sell a call. Um, and that's what we're going to be looking at. And also, there is a different method. So if you took this down from a daily range to your lower time frames, like a 15-minute, 5-minute opening range, or a Asia session or London session, RTH, 1 hour initial balance, 30-minute, you can actually go inside that range that you know that smaller time frame is going to be. Um, so this was something earlier. Ignore this. Get a drawing tool back. So let's say if we wanted to trade, well, that was a 5-minute PT3. Let's use a 15-minute, 2311. If you knew that your 15-minute range was going to be about 23 points, thereabouts, would you consider wanting to enter in the middle of the range for your entry, thereby mitigating your risk if your trade plan was wrong? So that is a way to approach it. And I can approach these type of ranges using the Renko bar to set my range period according to what I think the bar size might be for that range. And so we'll show you how I approach that. You could also set up this to enter in the lower, um, like if you put a 1 standard deviation on this range, you could enter at the low end of that first standard deviation as a strategy to come back. Or you could certainly buy at the end of the range. You've got, if you reach that at the end of the range, it's going to come back to that moving average, right? So there's many ways that you can do this once you know what the time period is. And like I said, so the daily range was 97.50. Here is the market analyzer. And as you can see, 97.32 was the daily PT3. So target reached and it went one more tick, right? And came back. Um, one or two more ticks and came back. So yeah, having an idea of what these ranges might be will be very, very helpful. Like I was trying to show you from the smallest one bar. So we can, set this profit target to run from the bar low or the bar high depending upon if you're going long. So you would want to take that 15-minute range on a 15-minute bar and make sure you take profits from the bar low. You know what I'm saying? If it reaches that range on the bar high, make sure you book them, Dano. Um, you always make money, scalping intraday by taking profits. So you don't have to sit there and wait for it to reach the outer daily range. Price fluctuates up and down from your averages. It goes out a certain distance and then comes back to the averages. Goes out, comes back in. It's like a ping pong match. So if you understand how these ranges work together, where you can get these inflections from to put you back in a position going to your outer targets, knowing what those outer targets are puts us way ahead of the ball game. So I've got this broken out for your monthly levels, your weekly levels, your daily levels, your Globex levels, and your 1 hour IB levels. And I'm giving you the calculations from the open and the close of the session. So you can have both plots available as a chart PDF. And of course, you'll always have your chart open where you can put your quarterly, monthly, weekly, daily levels and make these decisions on these various PT123s, how you're going to approach the market depending upon what you want to do. Are you wanting to come in and sell spreads? Or are you trying to day trade levels? Spread trading is very rewarding because you're going inside of a framework that many institutions are playing in. And I'm learning now about, some simple options, strategies, some strangles and straddles for events. So, we know where our first standard deviation is for those event trades, trading outside that standard deviation with range expansion and going to a target at PT123. This is a weekly. Um, and realizing where we are on these higher time frames, we went all the way to the quarterly one for this quarterly contract expiry. So the new one is we're right there on the risk line. If it breaks, um, that's going to be a little bit bearish, and we're hearing a lot of capitulation talk. So I would not be surprised to see a daily bounce, maybe, if it got to the second or third standard deviation of a daily. The Globex is a great, fantastic bellwether for the end of the range, and especially when you put the daily on top of it. That daily Globex, put a close and an open. So usually, let me get all the drawings off of it here for you. It will reside inside the distribution of the daily Globex. Very rarely does it pop out. Not very often. Here it was even capped by the last Globex. So very much it stays inside this cocoon. Once in a while it will pop out, and that's usually always OPEX and Vixpiration. Otherwise, we go right back into cocoon world where it's inside the distribution, and you can sell premium one side or the other of these lines and be earning income. The SPX so far, thank God, is still 1256 reg, so you can apportion your capital gains um, separately from ordinary income, that percentage that they allow you, which I think should be increased to 100%. But vote for me for Congress, you get 100% capital gains, right? I mean, I don't know why Republicans haven't, um, tried that trick, the opposite of the liberals. So anyway, but just an idea for anyone running for Congress. So inside the distributions and book your 1256 regs. I think it's 60/40, but that's really good. Um, I mean, considering you would otherwise have to pay 100% like you do with stocks. So that is the Globex Daily. And of course, if it breaks the range, it's because it's reaching for that higher time frame level. And that's usually a monthly or a quarterly. And so here it was breaching this in June and it was going to a quarterly level. These distributions also roll, um, and I set them up various different ways. I think I've shown this to you several times. Not only a month would have a month 3, but you can do a 12-week, right? So you can split your distributions up several different ways. And I think that is very helpful. And I can tell that the guys at the bank algos do the same a lot. Or at least it just looks like it. Maybe I'm just getting lucky, right, with my distributions. Who knows? But so the game is it's either having an idea of what, that 5 minute, 15 minute is and how you're going to address the market to position a trade with inside that range. And I have the Unirinco bar. Let me show you that real quick. Put it on the NQ for more flexibility. So what you do is you get your 15-minute range, right? So your 88.72, okay, or your 30-minute range in a larger volatility, 108.94. And I would put them side by side and even a 60-minute range. So have a 15, a 30, and a 60-minute Unirinco side by side. And so 88.72 times 4 is 354.88. So I would put a 355 bar on, 355. And I'll show you the Jets XREX. I've got a couple of different templates I've created. So this is very interesting. You can, like I said, put yourself in the middle of that range or at the lower end and pick up orders at those locations, thereby with the attempt of mitigating your risk. But the theory is to keep you in the trade as long as possible because you're using the current volatility and you're not getting in and out. You can sit on that level, and then my method for the Bloodhound Blackbird is to use a cross recross. So I cross above the level, so that's a 200, and then I cross back down below it before I get a signal. And then I can even wait. I mean, so I can make it touch the 200 first, but not execute the signal until it comes back and hits the 144 on the way back down. So my first entry would be the 144, and then I can get in at the 89, and then the 50 and the 21, and I'm scaling in after it has gone out of bounds and come back in. See what I'm saying? So you can place your trades using this on, you can require it to hit the 144 first and then enter at the 50 or the 89, 50, 21. So this is a fun little template that, does that. Make sure you go out first and then come back in. And then having the ability to set the bar size according to the range is helpful. That way you have more of a chance to stay in a trending state once that starts occurring. So I know I use my Unirinkos a lot differently than everybody else, and but the bottom price oscillator, I want to talk about that real quick. JATS has a price oscillator just like the NinjaTrader platform does. And the price oscillator, guys, is just a MACD. It's basically just taking price away from the EMA and allowing you to smooth it. Um, so if you were to go into your price oscillator, or excuse me, yeah, down here, price oscillator, and it's the same thing. So if I put it at 1/201, um, I could know where I am above and below the 200 EMA. Here it is down here. And the reason I have an absolute function on it, so I get the opposite. So here we're going lower. It's the bottom oscillator. Um, I give an absolute function on my price oscillator because in Blackbird, if you take an entry, a trend entry, using my method, and then you want to use a method of where you are to your risk line, the 200, as your profit target and stop, you can do so automatically by getting that correspondingly opposite level. So you could set your profit target for 23.52 and your stop at 23.52, the opposite of it, automatically. It's just a way to leverage your risk and profit target according to your spread between price and the 200 EMA. So it's a little slick. I like it. I also like, I could use this or the PT levels. So if you didn't have the PT levels, you might want to use the price oscillator, and you can arbitrage between your EMAs. But I use my PT levels to get my range, my average range, and I just shoot for 1, 2, 3 using PT. And I can get a percentage of that. I don't have to go for the full PT3. I mean, sometimes it's better to take a chunk of the apple, right? I can either set this to trade back to the opening dot. Do you see the trajectory is straight down once we get on that plane? I call it I call this the tube. See how it flattens out? The price oscillator flattens out, and you get into a tube situation. Once you start tubing and it goes flat, see that? Then you know that you're in the trend. Doesn't mean that it's not going to break on the other side, right? It just means that you have that extra bit of confirmation. So if you were to be lucky enough to have either a PT level or another inflection level intraday, those awesome inflection levels that you can get elsewhere, add that to this. You could use a market profile level or pivot point level, but at least knowing where the standard deviations are for time series helps tremendously as you are on your path of where to go, how far to go, in your 15-minute daily 1 hour IB if you're trading the Asia session, London session, Globex session daily, yada, yada, yada. So put your PT 2 indicator on like a 15-minute chart or a 60-minute chart and get your benchmark averages set for that time period in your mind, low, medium, and high, and the instrument will adhere to these levels. These volatility levels are static, pretty much. And the algos, static meaning if they break the volatility range, algos are going to kick in and do more range expansion automatically, going from, to their target 10 to 20, going to their sweet spot. Know your volatility ranges per instrument, they're all different. And if it breaks your sweet spot and goes higher, you need to understand that you're in a high um, breakout opportunity, like right here. See this? And you can be trading to those lower targets. So that's about all I have for you today. I'll get the market analyzer to you um, in the training room, and see you on Wednesday. Thanks, guys. Y'all have a great one.